Morning, everyone. Good morning. Hope you guys are doing well. Today is Tuesday, February the 17th. We had a long weekend, of course. So hopefully, you guys are all rested up. Plenty of things to kind of talk about coming into today. Economic calendar. We'll kind of go over the charts here in a second. Pretty big drop, of course, on Thursday, Friday. We end up having a kind of a pop and fade right off the bat, but not too much going on. We'll talk about the charts here, of course, go over the major indices, go over the tech names, and then we'll go over some of our top watches coming into market open. Before we do that, what is up, everyone? Good morning. Good morning, Victor. Happy Lunar New Year. Yes, appreciate that as well. Anyone that is celebrating Chinese New Year, that's coming up. TW, KO, Divine, Nontali, Cody. Good morning, B Roots, Andreas. Good morning, Juan. I am Robert, Vate, Chris, Lauren, Wonder. Yeah, what's up, everyone? Hope you guys are doing well. Today is, as I mentioned, Tuesday. So yesterday we had a market holiday. So there's a decent amount of things to kind of go over that we had over the weekend. Of course, we are down about 0.5% here on the ES. NQ's down about almost 1% here. So kind of talk about exactly what we're looking for coming into market open. Before we do that, let's pull up the economic calendar. Go over the red folder news events that we have coming to this week, and then we will head straight into the chart. So this is what we have for the economic calendar coming into today. We have a little bit of an orange folder news event, but that's not going to affect the market as much. The main thing this week is going to be the FOMC minutes. So this is not the FOMC statement, but this is the FOMC minutes that is going to be at 2 p.m. Eastern Standard Time tomorrow. So keep this in mind. Thursday, unemployment at 8:30. The main one coming to this week is going to be the core PCE. That's going to be at 8:30 on Friday. We also have advanced GDP here as well. And then Friday, we do have some more red folder news at 9:45, which is going to be the flash services. So as I mentioned, core PC, that's a big one to keep an eye out for. And then we'll also keep an eye out on the FOMC minutes tomorrow at 2 p.m. Eastern Standard Time. Yeah, I had lots of rest this weekend. Voice is definitely feeling a lot better. Now let's hop straight into the charts. So first things first, let's go on to the ES and let's zoom out here. We're currently on the 1 hour time frame. So the key levels coming to this week, as you can see, we have multiple touches here. It's just going to be our last week's lows. So as you can see, we have multiple touches. If we break underneath our last week's lows, next level really that I have is going to be all the way back down in towards this low we created, which is from earlier of this month, right? February 6th or February 5th lows, which is your 6760. So this is going to be the key level coming into today and this week here as well. If we break underneath our previous day lows, we can see some continuation towards the downside. If we see some buyers step in, right, overall the higher time frame is fairly bearish now, right? The order flow started turning bearish Friday. First pop kind of got sold into, and now you can see we're making these lower highs coming to market open. So if we want to see some upside, number one, you're gonna have to see a lot of buyers step in off this 6,800, and number two, you're gonna have to see the reclaim back above our Friday's highs of last week. So moving forward, at least for me, I'm gonna maintain a more bearish stance here on the markets until we can break back above our Friday's highs of last week. So what I'd like to see, as I mentioned, is a potential break underneath our previous day lows for continuation lower towards the downside. Any single pop, right, can be faded underneath our Friday's lows of last week. As I mentioned, of course, the longs are either you're looking for the bounce play here, offer 6,800 for a gap fill back towards the upside, or of course, now it's going to be above our Friday's highs. So the only long coming into market open really is just going to be your bounce off your previous day lows. And of course, you do have a mini gap fill towards the upside, back up and towards this 6860. But coming to market open, if the market does want to stay heavy, I'm more inclined to taking a lower right off the bat. If we go on to the SPY chart, similar thesis here, key levels that we have coming into today is just going to be our last week's lows. If we break underneath it, hold underneath, then we can see this push towards the downside right off the bat, down in towards this 670 here on the higher time frames. If you go back onto lower time frames here, exact same thesis. Underneath our previous day lows, we can see some continuation towards the downside. At least right off the bat, we can be looking for a little bit more of an aggressive short if the market does want to stay heavy. The only way you're looking for a potential mean reversion, which would be right the sweep of your yesterday's lows. Sorry, this is your Friday's lows, the bounce, and then we could be looking for this gap fill back towards the upside. So the gap fill is in play today, back towards the highs. I do expect the markets to head lower before we would reverse back up and towards our previous day close, but this is exactly what we're going to be looking for. Really, the previous day low retest right off the bat, or we wait for the flush and then wait for this reclaim back above our previous day lows for this gap fill back towards the upside. So this is what we have for the SPY coming into today. Now let's go on to the QQQs, which currently looks like it is trying to break underneath its previous day's lows. Let's go on to the hourly chart. Let me actually blow my nose here real quick. Okay, let's go on to the NQ here on the hourly chart. So the NQ has been more weaker compared to the ES. Let's go on to the higher time frames. As you can see here, compared to the overall markets, if you look at the ES compared to the NQ, NQ is closer to the bottom of the range here. And if we're looking at NQ, we have a very key level of support here, which we have multiple touches. If we actually break underneath this key level support, we can see a lot more downside here, specifically on the tech names. So as you can see, 1 touch, 2 touch, 3 touch, we are about to test this level once again here coming to this week. So this is going to be very important. So if we're looking at this on the hourly chart, there's a very good chance we end up pushing lower down in towards our 24,300 sometime this week. The key levels that we have is going to be your last week's lows. Similar thing, if we can break underneath here, based off the hourly chart, we can see this nice continuation back down in towards our 24,300. So as you can see, right, lower highs are being built. Rejection last week, markets were staying heavy, and then we end up having a drop here on Thursday. Friday, pops are being faded towards the downside here as well. And now you can see what we like to see is this push towards our right 24,300. So based off the 15-minute time frame, it does look like we're breaking underneath your previous day lows here in the pre-market now as well. So we're just going to keep an eye out on your previous day lows. If we maintain underneath previous day lows, we could be looking for a continuation down in towards this 24,300. Only way I'm interested in upside is if we have a strong reclaim, buyers step in right off the bat. We reclaim this level of strength, then we could be looking for your previous day close, which is going to be back up in towards your 24,800. But as I mentioned, I'd much rather look for pop and fades for a push down in towards that 2300 here on the NQ. Let's go for the QQQ. As you can see here for the Qs, we're right at your previous day lows currently. It does seem like we're breaking underneath this level here in the pre-market. The next level towards the downside here, of course, is going to be that 588. So let's go on to the daily chart. So as you can see here, we're on the daily time frame. So if we break underneath this key level here for the QQQ, the next key level that I have is going to be all the way down in towards our 580. So as you can see here for the Qs, we're staying heavy. Every pop is now being shorted. Market sentiment showing a lot more weakness here as well. Break underneath this 596, we can see this push down in towards this 580. So for the Qs coming into today, and coming into this week, the key levels that we're going to have marked out is number 1, just our last week's lows. Similar thesis underneath our previous day lows, continuation towards the downside. So let's just go on to the 15-minute time frame. So as you can see, the two scenarios are really the one scenario that I have for downside is going to be, of course, underneath our previous day lows. So if we reject off this level, we can be looking for continuation down in towards our 589. Another possible scenario, of course, here is if the market pops, right, stays heavy, either comes back up in towards our Thursday's low of last week or even our previous day close, right? The markets can still stay heavy and continue back towards the downside later into the session. But the short, in my opinion, the best short is going to come right off the bat within the first really 5 to 15 minutes. As soon as we get that rejection, we can be looking for a quick move towards the downside. So the number one scenario, as I mentioned, previous day low retest right off the bat. If we do want to see longs, right, we are underneath our previous day lows. If buyers do want to step in right off the bat, let's say within the first 5 to 15 minutes, we could be looking for this potential previous day low reclaim for a quick trade back up and towards our previous day close, which is our 601. This is a possibility, as I mentioned, that would just strictly just be based off of intraday price action, and we would be looking for the reaction off our key levels. Of course, the higher time frames is now flipping towards the downside, so we'd much rather look for pop and fades towards the downside, down in towards our really 596, along with this 589 here on the higher time frames. So this is what we have coming into market open here on the major indices, with us being underneath our previous day lows. That is going to be the key level to keep an eye out for coming into today. Now I'm going to head on to the SMH along with the IWM. And then I'm going to head on to some tech names here. If you guys do have any tickers or any charts you'd like me to go over, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below. What's up, everyone? Good morning. Hope you guys are doing well. Let's head on to the SMH. So the SMH here, this is the one that's been leading the market back towards the upside. We talked about this previous level of resistance turn into support. Nice push back up and towards our all-time highs. Now you can see we're having a little bit of rejection off this general area. And you can see a couple of the semis are now pulling back. So NVIDIA pulling back, AMD pulling back. Last week we had a nice bounce on, right, MU and a couple of these other tickers. But ultimately SMH is now going to have this rejection here, and we're going to have a little bit of a pullback. So for SMH, right, so we recently just had a pullback here off our all-time highs. Now the key levels that we like to see it just maintain is really above our 402. So as you can see, this is our key level from last week. We have multiple touches here off our 402. If we do want to see any sort of upside, we need to see the reclaim back above this 402 for a push up and towards that 410. If we do maintain underneath that 402, we can see this bigger push down in towards that 396 and potentially even all the way back down in towards that 390. So that's going to be the key levels moving forward here on the SMH. It's just going to be our previous day lows here as well, 402. As I mentioned, underneath 402, continuation lower reclaim. You can see a push back up and towards our previous day close. If we go on to the IWM, let's go into the hourly chart here. You can see just a lot more consolidation. Last week, we tried breaking towards the upside, but just was not able to reclaim back above key levels, but higher time frame as well. Previous level of resistance turning into support. If you go back onto the hourly chart, we're just consolidating more than anything. As you can see, the key levels that we have is, of course, our 258. And of course, we have our upside, which is our 269. So the key levels that we have is just going to be that 269 along with our 258. And then we also have the middle of the range, which is our 256. So you can be looking for low risk longs off our 258 here. This is the bottom of the range. The top of the range in this case is, of course, our 269. And then we have the middle of the range. So if we're looking for longs, we like to see longs above our 265 or low risk off our 258. Shorts are in play here. Pop and fade here off our 256. Or the top of the range, of course, which is going to be that 269. So really not too much to talk about for the whole month of February. We have a little bit more consolidation here, even stretching back to the middle of January. So be a little bit more cautious here on the IWM. And even if you look at the Qs, if we're looking at this in the past really couple months, if you're looking at this on the daily chart, we haven't done too much on the Qs. This is a prolonged period where we've just had consolidation here. It's been the past really almost 3 to 4 months on the Qs. So we haven't really had a clear direction on the Qs. That's why it's been a little bit more tricky to trade some tech names. You had to be very selective, especially swing trades have been very difficult. Day trades have been fairly solid just because there's been some certain themes that have been moving nicely, but swing trades in specific have been very difficult the past few months just because Qs has been ranging here, of course. All right, now let's go on to some tech names that we have coming into today. We're going to start off on Tesla. As I mentioned, if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below. Okay, let's first talk about Tesla. So Tesla here on the higher time frames. Let's remove a couple of drawings that we have. The key levels that we have for Tesla is our 415, 416 key level. As you can see, this is the area that we broke down from originally. Use this as a mini resistance once we broke back above. Nice continuation higher, but ultimately markets started showing more weakness later into the week. And now you can see we're right around this 415. So moving forward here, if we maintain underneath this 415, we can see a potential flip and a push back down in towards our 400 and our 390. This is a possibility here for Tesla if now we maintain 415 moving forward. If we can reclaim back above, I personally it's gonna be a little bit more difficult longs just because the structure now we're flipping back bearish. We're gonna have to get it back above our previous day highs at a minimum. Even if we do reclaim back above our 415, longs are going to be a little bit more difficult just because of the overall market here as well. So if you go back onto Tesla, the key levels that we're going to have today is, as I mentioned, that 415. We're also going to mark out our previous day lows along with our Thursday's lows of last week. So this is the exact level, 414 here. If we reject, we could be looking for this pop and fade for a push towards the downside for continuation lower. Another possible scenario, if we can get above, reject here off our previous day close, we could be looking for this continuation back towards the downside here as well. The only way you're interested in longs is if you had a really strong push right off the bat and you had an immediate retest, and you could be looking for our previous day close, which is back up in towards our 417. It would just be a quick day trade right off the bat on Tesla. At least for longs, my favorite longs are going to be above our 423 at a minimum. But as I mentioned, lower time frames, you could just be looking for scalps back up and towards that 418. Now let's go on to NVIDIA. Overall market, it does seem like we're pushing underneath our previous day low. So let's first take a look at NVIDIA here. So NVIDIA here on the higher time frames, we've rejected this level multiple times, which is our 194. So we've been talking about this range here for a while now. We have the bottom of the range, which is our 170, and we have the top of the range, which is our 194. Oops. Let me bring this back up. So the key levels that we have here for NVIDIA, 194 as I mentioned, last week's highs, multiple rejections off this level. Our key levels of support is all the way back down in towards that 170. So for NVIDIA, really coming into this week and moving forward, the key levels we're going to have top of the range, bottom of the range, and we're going to also mark out really the middle of the range here, which is our 184. So if we can maintain underneath equilibrium and the bottom of this range, we can see a potential move down in towards our 170 here on the higher time frames. If we reclaim back above, then we can see this push up in towards that 194. Let's go back onto the lower time frame. So the key levels that I have coming into today is going to be that previous day lows, which is that 182 here on NVIDIA. So this is the key level. I'm going to mark out that previous day lows. If we can maintain underneath that previous day lows, we can see this bigger push towards the downside. We can be looking for a pop and fade. If we want to see any sort of mean reversion, the reclaim back above our previous day lows is necessary for a potential push up and towards. Now it's just going to be our previous day close and potentially a couple pre-market levels that we have, which would be our 185. But coming into market open, I would like to see pop and fades on most of these tickers here. So that's going to be the kind of the thesis coming to market open until right either the market wants to have a lot of strength right off the bat, or if we can reclaim back above key levels with strength. Let's go on to AMD. Key levels here on AMD is going to be our last week's lows here as well, which is just our Friday's lows. If we go on to the higher time frames and remove some of these drawings here, the key levels that we have marked out, as you can see, is just going to be that 205, and then of course we rejected off our gap fill level, which was that 220. So moving forward here on AMD, you can see multiple touches once we reclaim back above. Nice push towards the upside. Thursday came back down, Friday came down here as well. If we maintain now underneath that 205, we can see a push down in towards that next level, which is our 200, along with our 198. So those are the key levels here for AMD. If we break underneath 200, we can see a push down in towards that 198, as I mentioned. If we reclaim back above, let's say within the first hour with a lot of strength, we can see this potential mean reversion back up in towards that 210 here on the on AMD. So this is what we have. If we go back onto the lower time frames, now we kind of understand the higher time frame thesis. On the lower time frames, key level is just going to be that previous day lows. Rejection right off the bat, we can see continuation down in towards 200 and below off our previous day lows here for AMD. The reclaim with strength, we can see a push back up in towards that 207. So this is what we have for AMD coming into market open. Today, we're just going to base it off of, as I mentioned, the reaction that we have off key levels. I am leaning more towards the downside, at least right off the bat. But if the market does want to reclaim with strength on the SPY and the Q, so far you can see SPY defending our previous day lows, Qs trying to reclaim back our previous day lows here. So as I mentioned, we'll keep an eye out on that coming into market open. Now let's go on to a few other tickers. Let's go on to Apple. So Apple, a little bit of a pullback here. Key levels that we have was not our all-time highs, but we had a key level 280 last week and a pretty significant pullback here on Apple on Thursday. And then, of course, on Friday, we end up getting this nice push towards the downside here as well, down in towards really this earnings low that we've created. So for Apple, key levels that we have is really this exact level, actually, our 254. Really solid push down on Friday underneath our previous day lows, down in towards that 254. So moving forward here on Apple, what we like to see is a little bit of buyer step in, right? Potential morning flushes in play, but I like to see that reclaim. Next levels back towards the upside is our 260.50 in the area that we broke down from, which is our 259. So this is what we have here for Apple coming to market open. If we do want to see continued downside, we potentially break underneath this 254, which is our previous day lows. We can see some more downside off the bat, but as I mentioned, we are down into a very key level of support here. So I wouldn't be surprised if we do see some buyers coming into market open after really having 3 down days in a row here on Apple. As for Google, this one continued weakness. Now we're underneath our earnings low here as well. As you can see, breaking underneath key levels. Now moving forward, if we can maintain underneath our earnings low, we can see continuation lower. If we go back onto the lower time frames, this is the key level that we have coming into market open. It's our 308. Other levels that we can have marked out as well is going to be this 305. So what we like to see moving forward, potential pop and fade here off our 305 for continuation lower. Or if we maintain underneath our earnings low, we can see some shorts in play underneath our 307. So that's what we have. Basically Google, Microsoft, a couple names dropping towards the downside here. Let's take a look at Microsoft now as well. So the first pop being shorted last week, price action did stay heavy underneath our 422.50. Now you can see we're staying heavy now underneath this 405. So for Microsoft moving forward, what we like to see is the reaction that we have off our 405. And the other levels that we can have marked out here now is going to be our previous day lows, which is our 398. So we have a couple scenarios coming into market open. We're either going to be looking for your previous day low retest for continuation down in towards that 394. Another possible scenario here is going to be the pop up in towards our previous day close. And then you could be looking for the rejection here off our previous day close, 401, or the reclaim later into the session. The only way you're really interested in Microsoft longs here will be essentially buyers stepping in here off the key level of support, which is our 394. Or if we can get a strong reclaim, you could be looking for longs above our 406. Sorry. Or 406 here. So that's what we have for Microsoft coming into market open. Now for Meta, as you can see, a lot of these names end up having a nice mean reversion. So if we had earnings, we had a bunch of earnings 2 weeks ago, 2 to 3 weeks ago. And you can see any name that did have this nice pop towards the upside have now really filled its earnings gap back towards the downside if we did have any gaps. And now we're essentially gravitating to its earnings low. So for something like Meta, nice push down in towards our earnings low last week. Now we've already hit one of our main objectives. Upside is in play if we can see some buyers step in, potential mean reversion back towards the upside. If we reject off our 640, we can see some continuation lower down in towards our 620 and below. So coming into market open here today, key levels that we have marked out is going to be that our 637 rejection. We can see your pre-market lows here and below. The reclaim, we can see a potential move back up and towards that 643. All right, so that's what we have on Meta. As for Amazon, gravitating down in towards this earnings low here as well. So nice push towards the downside. Now we're just kind of consolidating here. What I personally would like to see is this drop towards the downside right off the bat. So for Amazon, keep an eye out on your previous day lows coming into market open. You have two scenarios that you'll be looking for. Number one scenario, previous day low retest for continuation towards the downside. Another possible scenario here is going to be the opening drive play for this push towards the downside here as well, down in towards 196 here and below. A lot of these ones, I do expect them to move lower before we'd get a bounce. So as I mentioned right off the bat, a lot of the times we will see a morning flush before we get this kind of reversal back towards the upside. So we can look to capture that morning flush towards the downside. That's a little bit more aggressive, or we'd have to wait for the buyers to step back in above our previous day lows to take any sort of reversal setup. As for Netflix, this one, if we look at it on the daily time frame, this one, as you can see, has been pushing down quite a bit. So the key level here on the higher time frames that I do have marked out is a potential retest level all the way back from 2022. This is a higher time frame key level. I'm not sure if it's going to hit, but if it can hit, this is a very good dip opportunity for continuation back towards the upside. At least in the shorter term here for Netflix, we end up having a nice push towards the downside last week. Key levels moving forward is going to be that 79.50. If we maintain underneath 79.50, we can expect continuation lower, or now, of course, underneath our 75.50 for continuation towards the downside as well. If you go on to the lower time frames, key levels that we're going to have marked out today is going to be that previous day lows. As you can see, we're getting some buyers stepping in here in the pre-market. If we can maintain above our previous day highs today, we can see this nice potential mean reversion. Or now I'd like to see it above our pre-market high for a potential push back up and towards our 79.20. Shorts are in play if we do have a reversal underneath our 77, which is our previous day highs. We can flip and push all the way back down in towards our previous day close. Okay, that was a decent amount here to go over on the tech names. But coming into market open, I'm going to go over my game plan here in a second. But if you guys do have any other charts, I'll probably go over them for the next 5 to 10 minutes. So if you guys do have any charts or any tickers you'd like me to go over now, you guys can drop them in the chat. As for my main game plan, at least coming into today here, so for the Qs, as I mentioned, I would like to see this higher time frame key level of support. So as you can see, key levels that we have marked out is our 596. Last week's lows, we saw some buyers step in here on Friday. If we break underneath, I'd like to see this push down in towards our 588 here on the higher time frame. So this is kind of the main thesis coming into market open. And really coming to this week here is on the Qs, weakness underneath our previous day lows. That's going to be key. So with that in mind, right, I'd like to see, right, Tesla, right, key level, previous day lows, keep an eye out on Tesla. Nvidia, similar thing. This one's showing a little bit more weakness. So the semis are on watch. Even AMD now underneath a key level support. So keep an eye out on AMD retest underneath that 204 right off the bat. So really Tesla, Nvidia, AMD, and then there's a bunch of other tickers that are showing some weakness as well. Apple's been showing a lot of weakness, but this one kind of filled its main objective. Google will keep an eye out on previous day lows. So basically almost all the tickers are on watch today underneath our previous day lows. But with that in mind, I'm going to focus in on, right, Tesla, Nvidia, and AMD, since there is a lot of tickers to keep an eye out on today. That might make it where it might be a little bit more difficult, just because whenever we do have tons of watches to look out for, and when a lot of things are looking good, sometimes it's a thing where we have too many watches to keep an eye out for. So just keep an eye out on the major indices themselves, and then Tesla, Nvidia, and of course AMD. All right, let me grab some water here, and then we'll head on to a few tech names. All right, let's go on to a few of these tickers now. Someone's mentioned Palantir. So Palantir, so coming into today on Palantir, let's actually go on to the daily time frame. So for Palantir, the daily time frame, we're actually coming back into a key level of support here as well, which is our 125. Next level, if we break underneath 125, so far markets are staying heavy. Every pop has been shorted ever since we had some earnings as well. We've been just staying heavy. Next level here, if we break underneath this 125, sorry, it's going to be all the way back down in towards really this 100 key psych level. So let's go back onto the lower time frames. Really the key levels that we're going to have marked out coming into this week. Sorry, one sec. Really the key levels that we have coming to this week is going to be that 127. So this is our last week's lows. Let me just kind of readjust some of these levels here. So coming into this week, the key level here is going to be that 127. You can see we have multiple touches. Touch here from earlier from February, a couple touches on Thursday, Friday here as well. Break underneath 125 or 127, we can see a bigger push towards the downside. So let's keep an eye out on Palantir coming into market open. Key levels that we're going to be looking for: 127, break underneath, retest, continuation towards the downside. Another possible scenario is going to be some sort of pop and fade, and we could be looking for this pop for a push down in towards our previous day lows here as well. Only way you're interested in longs if price pushes down aggressively and then buyers step in aggressively, defends our previous day lows, and you can see this mini mean reversion back up and towards our previous day close. So a lot of these names are gapping down here. If we do see some buyers, as I mentioned, offer previous day lows, I personally don't like the previous day low bounce as much unless we get a lot of buyers stepping in, and if the Qs end up having a very bullish reaction off our previous day lows as well. So that's what we have for Palantir. As I mentioned, higher time frame, key level, keep an eye out on this 126. As for some other charts, let's go on to Hood. So if you look at Hood here on the higher time frames as well, let's just get rid of all these levels. Really, Hood, the key level that we have moving forward is our previous level of resistance that we like to see the reaction off of, which is going to be this 65. So this is the high that we created here all the way back from February of 2025. If we can retest this level, let's keep an eye out on the reaction that we have. So that's going to be the key level moving forward. So far, you can see nice kind of bounce, but ultimately that bounce is now being shorted into. Key levels that we have on Hood coming into today is going to be our Friday's lows. Let's actually just kind of mark this out. So we have a key level here, which is our 77.50. This is our earnings low, which so far you can see we're rejecting off of. Now the next level that we have marked out, let's just actually mark out our last week's lows, which is going to be our 71. So if we maintain underneath our previous day lows, sorry, previous day highs, you can see this continuation towards the downside. Shorts are in play here underneath our previous day close for push down in towards our 71. Only way you're interested in longs is if we had a super strong reclaim back above our 78 for this pushback towards the upside. As for MU, this one, nice push towards the highs last week, but ultimately now breaking back underneath key levels. As for MU, the key levels moving forward that we have, it's still holding still holding up on the daily time frame, but overall markets are pulling back here. SMH pulling back just a little bit. Now we like to see a little bit more consolidation. So consolidation here on the daily chart, and then eventually push back towards the upside. But as for MU, the key levels moving forward that we're going to have marked out is really the area that we broke out from. So we have our key level of support, which is our 368. Other levels that we can have marked out here as well is the area that we broke out from, which is this 396. So far, you can see buyers are defending this level here on Friday. And then we also have your 410. So longs bounce play here off our 396 are now above our 412 for this continued pushback towards the upside. Another possible scenario, of course, is going to be now above our previous day highs. But I like to see a little bit more consolidation now on MU. As we go on to SNDK, the key levels that we have marked out, let's just kind of remove a couple of drawings here. As for SNDK, the key levels that we have marked out is going to be our last week's highs, of course, all-time highs, and then we also have other key levels, which is the area that we broke out from, which is our 620. So for SNDK moving forward, key levels that we have marked out, we have our key level of support, earnings low. We have the area that we broke out from, which is our 620. And then we have our last week's high. So if we do want to see some upside here, we like to see it maintain above our 620. This one, in my opinion, just looks like it's consolidating a little bit more here. If we break underneath our 620, we can see a push down in towards our previous day lows. So a couple of these names consolidating specifically on the semiconductors, MU, SNDK, Intel consolidating. So you just want to be a little bit more cautious on some of these semiconductors here now, of course, with the overall markets pulling back as well. Let's go on to a couple more tickers. Let's go into IBIT. So for IBIT, basically your Bitcoin ETF. Key levels that we have on IBIT. This one's dropping towards the downside. So key levels that we have marked out here on the weekly time frame is this level right here, which we broke underneath. And actually, let me get rid of a couple key levels. This previous level of resistance that we want to see turn into support. So now that we go into the lower time frames here, you can see really solid push towards the downside on IBIT. Key levels is going to be that 42. You can see a little bit of reaction off that level, but moving forward here, key levels that we're just going to have marked out is going to be that 4150. Levels that we need to see it get above is at a minimum back above this 3850. If you do want to see some upside, we need it at a minimum back above this 3850 for continuation. If we reject off this level, we're going to see this push right back down in towards our 3750 here and below. Okay, let's go on to a couple more tickers, and then I'm going to get ready for market open here. Let's just quickly go over gold and silver. I haven't talked about these in a minute, but after we had that nice bounce play here off our previous level of resistance, some lower highs were still being built, nice pushback towards the upside. Ultimately now we're just kind of consolidating now after having this big push towards the downside, and we had that first initial bounce. So the key levels that we have are still valid, right? 50, 160. Other levels that we have marked out here as well is our 5,000 key psych. So the volatility has dried down just a little bit. So moving forward, if you do want to see upside, reclaim back above our 5,000 is key for continuation, right? If we reject off this level, we can see a push right back down in towards that 4870. If we go back onto silver, another one just kind of chilling right at our key level of resistance, now turning into support. So what we like to see here on the higher time frames, if the daily candle closes underneath, we're going to see this push down in towards that 65,000. If buyers can step in, then potentially we can see this nice mean reversion. So if we go back onto the hourly chart, this level is fairly clear. You can see multiple buyers, or we've just kind of been consolidating right at this general area, but we've not closed underneath. So if we do close underneath, we can see continuation towards the downside. If we do want to see buyers step in, we need this strong reclaim back above our 76,000. So that's what we have coming into market open here today. Now let's go on to the game plan moving forward. So as you can see so far, SPY buyers are stepping in here off our 678 coming into market open. So as I mentioned, key level today is going to be that previous day lows. We can actually mark out another level here as well, which is just going to be that Thursday's lows for potential pop and fade. So shorts are in play underneath our previous day lows, or the pop and fade here off our Thursday's lows of last week for continuation. If we flip back above, then I'm going to be more neutral intraday. If we can get above our 681, neutral intraday, as I mentioned, maybe even laying a little bit more towards the upside if buyers step in right off the bat. As for the Qs, the key level that we have marked out is going to be that previous day lows. Similar thing, a pop and fade level that we can keep an eye out for is going to be that 600 key psych. So shorts are in play underneath our previous day lows right off the bat, or a potential pop and fade here off our 600 for continuation lower. My key game plan, or my key watches coming to market open, is going to be Tesla. Keep an eye out on your 414. We'll keep an eye out the reaction that we have off this key level coming to market open. Nvidia, similar thing here. Previous day lows, 182. AMD, another one that I do like for some downside. If we can break underneath this 204, we can see this continuation lower down in towards 200 and below. So we'll keep an eye out on AMD, one of my favorite ones coming to market open. And then of course, there's some other tickers here, but they're right at our key levels or underneath our earnings lows, right? Just keep an eye out on the reaction that we have off our previous day lows coming into market open. As I mentioned, there is tons of watches to keep an eye out for today, but sometimes, as I mentioned earlier, that's not really a good thing when there's so many names that look good or that have very similar setups. You just want to pick 2 to 3 tickers and focus in on those ones. So focus in on the SPY and Qs themselves, and then of course you should keep an eye out on Tesla, Nvidia, and AMD. But yeah, that is going to be it for me today. Most likely I do see some questions. Let's see. Yeah, if you're asking, if you're brand new here, some people are newer. If you guys look at the watch list here on the right hand side. If I went over the ticker, that means I most likely already went over it. So let's say I'm down here on Amazon, that means I already went over Tesla. Or if I'm talking about the SMH, I already went over the SPY and Qs and some of the futures charts. So I go down a list right at the beginning so you can rewind the stream. That's what YouTube's for. And then you can check out the levels there and like the full detailed game plan. Now closer to the end, I'm just kind of recapping what I mentioned earlier. Besides that, yeah, that's most likely going to be it for me today. I'm going to get ready for market open here now. So hopefully you guys did enjoy that. If you did, appreciate if you guys drop a like. If you guys haven't joined the free daily watch list as well, that one's in the description. And yeah, that's going to be it for me today. Anyone that's celebrating Chinese New Year, happy Chinese New Year. And yeah, that's going to be it for me. And I'll see you guys all tomorrow. All right, take care, everyone. Peace.